Well, the JSE is firm today, so far at least, with global peers mixed as investors are waiting for key inflation data from the United States. Meanwhile, the rand is under pressure ahead of the Phala Phala vote in Parliament in just under 2 hours from now. Let's speak to Chantal Marx, Head of Equity Research at FNB Wealth and Investments. Joining us now, Chantal, welcome to Daytime Update. To make sense of all that's going on domestically and globally, let's pick it up with the rand, which, as I was saying, is continuing now to extend losses from the previous session. Are we heading for a further slump, especially closer to the Phala Phala vote and perhaps post?
Oh, well, I think it all depends on global and local factors. So the rand is weaker in line with other emerging market currencies. It is weaker than its basket of emerging market peers, which does say that the rand is concerned around how the vote around Phala Phala is going to go. Or it could also be other South Africa-specific issues. I mean, we also have seen very disappointing mining production numbers coming out earlier today. On the global front, it's going to be a function of how that US CPI print plays out. So if CPI is going to be higher than expected, and we could expect more interest rates or aggressive interest rate hikes from the Fed, you could see a further weakening of the rand. But really, I think investors are just kind of staying away right now. Everyone's on tenterhooks waiting to see what's happening around that US CPI print as well as Phala Phala.
You referenced the mining production data on sales that's out for the month of October. Where does that leave us as far as being able to view or assess the current health of the South African economy?
So mining is very important to the South African economy. It has become less important over the years as the industry has shrunk. I think over the last few years where we've really had a commodity super cycle where pricing has been very supportive, we have seen some growth in that sector again. The problem that we're facing right now is we actually have a lot of operators scaling back operations because of factors such as railway reliability, for example, in the coal and in iron ore. And then we also have severe disruptions because of load shedding. I do think that most of these mining companies continue to view South Africa as an okay destination to operate in. And a lot of these guys are now starting to solve for the energy crisis by generating their own electricity, or at least moving in that direction. We are still going to have several months, perhaps even a year or two, where the industry is going to battle with things like load shedding. And I think railway reliability is still going to remain a factor here. So it's something that we can fix ourselves. It's just a matter of having the political will to do so.
And in November, the SACI Business Confidence Index recorded, I think, a reading of around 110.9 points. Relatively stable, I'm told, as far as business confidence is concerned. But how stable is stable?
Yeah, it's actually quite interesting. I was looking at this index and looking at it back beyond COVID-19, and it's actually at higher levels than it was prior to COVID-19. Now, the way that this index is constructed is quite interesting. It's not necessarily a survey that goes out to business owners, but it does look at several important input points or other indexes and then kind of amalgamate that together. So if we look at some of the factors that led to an improvement in this specific reading, the really strong performance by the JSE helped. So, I mean, that is something that's really outside of business's control, but I guess that it does give you an idea of how businesses are viewed in South Africa. Manufacturing output was pretty strong. We know that manufacturing output actually surprised to the upside more recently. And new vehicle sales have improved quite nicely. I think we've had quite a few nice new model launches coming through, and the cycle at the moment favoring new vehicles over used vehicles. So a few random inputs there leading that confidence index higher. I think you'll be able to read a little bit more into a surveyed confidence index or surveyed confidence reading than you would specifically into this one.
Let's end with Vodacom, which has now completed the purchase of a 55% stake. That's in Vodafone Egypt. Where will that take us, or what will it mean, in fact, for the group's service offering moving forward?
So it's quite an interesting one for Vodacom. Vodafone Egypt was owned by Vodafone, which now owns 65% of Vodacom. So it seems as if Vodafone, which is a UK-based company, is basically consolidating its African assets under the Vodacom umbrella. In terms of Vodacom's life, Egypt will be quite substantial. It will contribute quite nicely to their revenue and profitability. And importantly, it's a growth market for mobile telecommunications as well as data. In South Africa, because economic growth is quite pedestrian and mobile penetration is quite high, we are seeing nice growth coming through from areas like data. But even in South Africa, smartphone penetration is moving towards saturation as well. Whereas in Egypt, you still have a very low data penetration and you still have mobile penetration below 100%. Another interesting thing in Egypt is that Vodafone is the largest kind of cash payments service or fintech cash payment service in that market. And in Egypt, you still have a pretty substantial unbanked population. So really an opportunity for Vodacom to also boost their fintech offering. And I know that most of these mobile telecommunications providers are actually looking to separate those businesses out going forward. So a really nice boost for Vodacom from that perspective as well.
Chantal Marx, a pleasure to speak to you. Thank you so much. Chantal is the head of equity research at FNB Wealth and Investment.